What's going on, everyone? So this is actually a great idea, Supergal. This was you who gave this idea to explain in detail the bot commands. The bot commands are great, but if you don't know what these pictures mean and how to utilize them, then they're kind of worthless for you. So I'm going to go ahead and break it down for you. We're going to go over in this particular video the open interest command, which is one of the most important commands, especially when trading options. Let's go ahead and take a look. So command number one, and there's two forms of this command. It's always going to be called using exclamation point, OI, space, and then type in the ticker that you would like to utilize. So I have two examples here. Fushu, he says OI OLMA, and then you can see that it prints out this picture here for OLMA. Then in main room, Janker Chief puts OI pay, and then we get a printout of the OI for pay. Now you can expand upon this, because if you do command and then the expiration date, so let me go back for a second. The reason you should always call OI and then the ticker you want first is because you get the expiration dates right there, and that's the same format that you'll need for the next command, which we'll go over in a second. But first, what does this mean? Well, our different columns here, we have an expiry date, we have OIC percent, we have OIP percent, we have OI, we have volume, we have VC percent, and we have VP percent. So the expiry date is obviously just the date that your contract expires. The call OI percent, that's with the C, that's for calls. And you can think of call OI as resistance. Now put OI can be thought of as support. So all it's saying is open interest resistance and open interest support. Which one's higher determines which one is which. Now the total open interest is obviously just the addition of these two together. And then you have a separate side of this picture here, which is the volume side. So don't interpret this all together, interpret it separate. Interpret it separately. So one side you analyze by itself, the open interest, which is your defense. Open interest is your defense, and then this is your offense. So what do I mean by that? Well, if you buy something and are long, you will buy calls, which turns up as volume. If you buy puts, you want the stock to go down, which shows up as puts in volume. Now, if you're buying puts for open interest, or you're not selling them, or you're holding on to them, it's likely because you're short or have sold these puts. If you are doing the same for calls, it's likely covered calls. So cash secured puts here, covered calls here, long calls here, long puts here. That's the difference. Think of this side as your short side, this side as your long side. Now, when does it matter if volume, does volume matter in comparison to OI? Yes and no. If the volume exceeds open interest, then it could. Since we have OIC here greater than OIP here, which is more resistance than support, however, we have more bullish volume than bearish volume, so it evens it out a little bit. So you just got to always pay attention to where's the volume relative to the OI, and then as far as the OI, which has more support or resistance. Or same thing for the volume, which has more, bullish or bearish. So in essence, the way to think of it, OIC equals resistance, OIP equals support, VC equals bullish volume, and VP is bearish volume. And then the middle columns are just the totals. Really, you don't even have to look at the totals. These three on the left-hand side, these two on the right-hand side, combined with the strike. That's all you need. Really, just these two. Whenever you're looking at this chart, only look at this and this, this and this. And then, if you see a lot of volume, then just glance and check, okay, is it higher? But you never compare the OIP, OIC to the VC, VP. You're always comparing OIC, OIP against each other, VC, VP against each other, and then OI and volume against each other total. Now, you can go in more specifically whenever you call that picture, if you call it in by the expiration date, the first column that we looked at. If you use that column and call it by expiration, then you get a more in-depth look into support and resistance for that specific chain, which I recommend everyone doing. And I would always do it in this order. OI first, and then OI date to break down even further the support and resistance and what it looks like. So Same thing, but a little different. So whenever you do it this way, after you call the specific expiration, you're going to get the open interest in order from greatest to least, which is awesome. Now, you do this the same way. You look at strike price 4. Okay, at strike price 4, is there more support or more resistance? Well, in this case, there's more support. So we could consider 4 a potential floor. And not only that, but not only is it support, there is 0 resistance, and it's the number 1 strike in this options chain with no bearish volume. Now, next to it is 6. Now, 6 is exact opposite. It is 94% OIC, 5% OIP, meaning 94% resistance, 5% support, meaning this is our likely ceiling. 4 to 6 for this expiration period. It's that simple. Everything else below it, considering the number difference, is likely irrelevant. Now, again, we could go down it because there is a huge difference between the first strike and the second as far as OI. All the support is stacked at 4, and you have a little bit at 3 as well. But 11 resistance, 7 resistance, 8 resistance, 9 resistance. That's why all of this is irrelevant, because if 6 is resistance, then nothing else matters unless it breaks 6. So we're only looking at this stock between 4 and 6. And basically for each strike, if you want to, you can determine if this strike has more support or puts or resistance calls in open interest. Then do the same thing for volume. Is there more call volume, bullish, or put volume, bearish? And then compare that total against the OI. And then in this example, there is not enough volume per strike to make any form of a difference. So we can just go by the OI alone. Our range of trading, likely in this one, is between 4 and 6. And now, the third thing you can do, and I'm going to go over this command in a separate video, but since you have both of those things, now you can do max pain and call that same ticker and strike. Let's just do an example. And likely, most of the time, your max pain is going to be right on target with what your commands are telling you. And that's open interest and volume command. One of the most important ones. It should be called on every stock play. Hopefully this helped.